Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
Welcome to Markets Now. I'm Michelle Rook with Allison Thompson of the Money Farm, and we have kind of some mixed but very, very quiet trade over in the grains. Livestock futures cattle market is lower this morning. All right, Allison, let's talk just a little bit about the corn market. We had pretty strong technical performance yesterday. This market is kind of gearing up for the report on Friday, isn't it?
Yes, it is. Obviously, a big fundamental data dump. We'll get some updates. And of course, with weather and some crop tours happening since the last monthly report, there is some anticipation that we're going to see some lower production numbers. So likely going to see some type of a cut in yield is really what the trade's looking for. Whether it's going to be sizable or not, I think it's debatable, especially when we're just seeing harvest kick off. But at least if we do see them lower yields, we know we're trending at least in the right direction here to keep markets supported. So up until Friday, I think we're still going to be somewhat in a trading range here and having a hard time to break above resistance levels. So breaking above 425 would definitely give some ammo here to the bull camp of seeing an extended leg higher, but we'll see if we can get that before Friday. I think it's going to be very difficult until we know what that report says.
Yeah. And USDA generally slow plays this as we go into October, November, even into the final report. But what's your thought? The average trade guess I see is down 2.8, almost 3 bushels per acre. If USDA doesn't go that far, will the market have to sell off?
It definitely could. If the market's going to be banking in a big one, a bigger cut. But even on the last report, we got a pretty decent increase in the corn yield estimate, more than what the trade was necessarily expecting. And we didn't necessarily completely fall apart. So I think that is worth noting. I think the trade's aware that the crop isn't as big as they say it is. But I think it's just the idea that we're moving in the right direction, that we're starting to see cuts come through. And I think the trade's aware that the issues out there are going to be bigger when it's all said and done. So I don't foresee us necessarily breaking support. I don't see us going back below $4. Never say never, because the other part of the equation is demand too. And they could definitely start moving that around here in September. My hope is that they don't compensate with lowering demand, even if we're seeing production cuts. So we have a good story though for demand on corn, and that's a good sign. So I think everybody's really going to be paying attention to what production does and where our ending stocks go from there. But ultimately, the trade's looking for ending stocks to be lower this month, but still around that 2 billion bushel mark.
Yeah, even though we have had some pretty severe disease, which is likely to cut the yield much more as we go into November, even the final reports, right?
Yes, and even the dry finish that we're seeing now, the month of September, it does look pretty warm and dry across much of the Midwest, and that could ultimately impact yields for both corn and soybeans when it's all said and done. So taking a slow approach here isn't necessarily the dumbest thing because we don't know where the crop's going to be, but ultimately, I do believe that we're going to see a trend lower here going forward and through the end of the year.
Soybeans, do you think we'll get much of a change there just because it's kind of early, or will we actually see a little bit of adjustment because of what you said, dryness and disease?
Yeah, well, they could make a small cut, but ultimately, I think we're going to stay relatively unchanged. We had an overall pretty good August, so there really isn't anything out there to say we really need to see a drastic cut. And again, like with corn too, I think we're going to wait until we get further into harvest and seeing some yield reports before the market gets too excited or the USDA gets too excited to make some yield adjustments. So I think the bigger talking point on the soybean side is the demand. We know that we don't have China in our market. We know that we are a little bit slow on the export side. So seeing some of those adjustments could be the talking point of the report on the soybean side. So we could see it go up. Ultimately, the trade's looking for it to be unchanged. And when you're looking for unchanged or not a lot of change, it definitely leaves the element of surprise. And unfortunately, I think the surprise on the bean side could be a negative factor, especially given current demand.
Yeah, it's going to be interesting to see what they do. As you said, China's bought no soybeans from the U.S. Our new crop exports are certainly behind the last several years. And the key is does USDA think we're going to get a deal or not? That's kind of what the market is hoping for right now. Is that why we haven't sold off more in the futures market?
Yes, so that very, very, very true. I mean, we've had some good unknown destinations announced and announcing sales. I mean, the hope is that we are seeing China maybe come to the table, but we don't know. That's the hard part. And we still got, a good month, a little bit more than a month here before we see the 90 days expire. And I think the trade's hopeful that we're going to see something, ahead of that November deadline. But if it were to get extended again, I think it's really going to pressure, especially beans here going into the end of the year.
Meanwhile, as a result of this, you've got an $8 handle on soybeans on new crop cash bids in Minnesota, North Dakota, South Dakota. What should producers be doing marketing wise with that in mind?
Yeah, it's definitely ugly, and I've talked with many producers here over the last few weeks, that this basis isn't getting any better, and a lot of guys feel stuck with the cash market. But that's really where your options are not stuck to the cash market. I've been telling guys if you are needing to make sales or you've made sales, if you're storing, you've got to be looking at those deferred contracts for making sales in hopes that we get some kind of a deal, and that you'll see some basis improvement. But ultimately you need to be protecting yourself on the board too. If you have made sales, I think it's a good time to get some reownership in place as well, especially for guys who have some harvest delivery here, because if we get some kind of an announcement, the futures market is what's going to move. So get some calls in place now, so that way you have some upside potential and you're not stuck with that cash market, because chances are if we get an announcement, the cash market isn't necessarily going to follow the futures. We could see basis get worse until we actually see some export demand off the PNW. So I would just recommend to producers to start looking at the futures market and taking some positions on paper, because I think that's where the movement's going to be. And to help your bottom line, that's where you need to be looking at. You're not necessarily stuck to the cash market this year. And when you're looking at times like this, I mean, these are definitely opportunities, and these strategies come into play.
How bad is the storage crunch going to be, though?
The storage crunch is definitely there. I've definitely talked to a lot of producers who we're not seeing, obviously, with little trains coming through. We're not sure what kind of storage is going to be available at local elevators. So a lot of guys are looking at other options and finding bin space that's available, bagging, piling. I've heard of all those things. So if you're doing that and you don't have anything priced, we got to make sure you're still also having some kind of price protection underneath this market. I know it's really ugly now and it's not exciting to protect prices where they are right now, but those are things to be looking at when it's all said and done. And even if we're looking at a big crop, I don't know how much is going to be lost just due to storage and things like that as we get further into winter. There's a lot of unknowns at play at this point.
Allison, what about the wheat market? We had a nice bounce yesterday and don't know if all of that was short covering, but we're not seeing a lot of follow through today. Do you feel like the market is in the process of trying to bottom?
I'd like to think so. Usually this time frame here, once we get through spring wheat harvest, and we start seeing, looking ahead here, we normally do see some kind of a bottom formation start to happen. And yesterday was definitely a good move. It's been a while since we've seen a double-digit gain in spring wheat, so it was nice to know that it's still capable of doing that. But we know harvest is wrapping up. We're looking at Canada's crop, and we're going to start seeing some more focus on the Southern Hemisphere's crop too going forward. So I think that if we're going to start forming a bottom, now is kind of the time frame. Today was a good start, but we got to stop printing new lows. We got to start making higher highs, higher lows. Would definitely give us some kind of indication that we're starting to bottom. One day isn't going to tell us that, but going forward here, I think those are definitely the things we've been watching and looking for in hopes that we start forming a bottom here relatively soon.
So we heard a lot about frost over the weekend in parts of the northern plains. What about your area? Was there any frost damage or?
Luckily, we didn't have any widespread frost damage. We did have a frost come through, but overall, the crop still looks really good. We didn't have anything to damage report wise. And now with this heat coming through, it looks like we're going to have a decent finish here for our crops in the area.
You mentioned the September contracts go off the board on Friday. What are you watching there?
Yes, September contracts for the grains do go off the board on Friday, as well as our USDA report. So we kind of got a double whammy there. But the September contracts, when they go off the board, can kind of give an indication of where the next front month is headed. And right now we do see quite a bit of carry in the market from September to the next front month contracts. So sometimes when, we see September go off at a discount to the next front month, we kind of feel like there's that gap there, and the market could just go back down and fill it. It just gives a target for the market and for the trade to go to. So as we get into Friday, depending on where we close on Friday, it could give some indication of where we might be headed, at least over the next couple of weeks. But the thing with gaps too on those continuous charts is they can remain there for quite a while too. So if we do start getting good support in this market on Friday, we don't necessarily have to fill them either. But it's just another thing to watch, as Friday could definitely be a volatile session.
Thanks for joining us. That's Allison Thompson of the Money Farm, and that is Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.